Trump tariffs and fears surrounding them have wiped out nearly $4 trillion in the stock market. And actually, the entire crypto market is also frothy with complaints about how Trump's been running things so far because they're tremendously down on their portfolios. As even one user says, he's down 40% since inauguration day and is basically claiming Trump rugged the entire crypto market. He made a mistake voting for him. And many people believe that now Trump is going to wreck the soft landing that markets were in for. And not only is he obviously already creating a lot of turbulence, but he's pissing a lot of investors off because they are all down. The entire crypto market has lost 33.8% of its value from peak to the most recent low, which has wiped out $1.24 trillion in value. Anything below 20% is considered a technical recession. In other words, the crypto market is experiencing a recession. But will things change? We'll be sure to discuss that in this video. But this has only caused Bitcoin's market dominance to continue to rise as more investors get wrecked on their altcoin bags and money flows into Bitcoin and stablecoins as a hedge against all of the volatility. Bitcoin recently just broke above its range highs at 61.9%, up to 62% of all of the money in the crypto market. But what's really going on beneath the surface? What are the institutional guys doing, and what comes next for XRP? Will Trump tariffs continue to spook markets into selling their bags, and how long and how deep will this thing go? Is this the start to a new bear market, or should you be doing accumulation in these ranges on some of your favorite altcoins? Because as we already know, altcoins typically outperform Bitcoin in a very bullish environment, but in a bearish environment, they typically sell off very strongly. Plus, I'll be covering one other crucial chart that virtually always predicts what happens next in markets that nobody in crypto markets is currently really paying attention to. So as always, even if you ain't feeling too bullish, if you're feeling blessed, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners YouTube channel. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDeFi, PAULIEDEFI. One of the biggest reasons the entire market has seen quite a strong sell-off is because of fears surrounding Trump's economic policies and just how much he seems to be harming trade partnerships between current friends and allies in other countries. That said, he is playing a strong hand, and as one analyst said it, he is telling us in everything he is doing that he is not kidding around. On tariffs, he believes it in his bones. Trump believes that tariffs are the key to boosting economic growth long-term in the United States. However, in the short term, tariffs are likely to send up prices. And I actually tend to agree that that is true. Matter of fact, even the uncertainty surrounding what's going to happen with prices and businesses is scaring the crap out of markets. Hence why this is now the fourth straight week in a row. From the high of 6,100 on the S&P 500, we've seen a dump down to $5,500, and the price is currently sitting below the previous range high over here on July 15th of 2024. The real question people have now is what happens next? This is some nasty selling, and ultimately even the volume is showing that. So much so that even on your benchmark S&P 500, we are down 10%, which is not considered a technical recession. But a lot of this sell pressure has actually followed into one of the more risky asset classes because it is more volatile and less liquid, and that of course is crypto. As the crypto market has now seen a sell-off of almost 34%, currently we are down about 28%. From a stock market perspective, that is a recession. I would argue anything below 30 to 35% in crypto would be a crypto recession. However, when you look at the chart charts on Bitcoin and even XRP, this isn't the first time that we've actually seen any sell-off that wasn't at least 30% before major moves to the upside. In the case of the 2017 bull run, we saw a 40% sell-off right here. Then the market continued climbing higher. We saw another 40% sell-off yet again. And then finally, right before making its Pico top, we saw the market pump up to $7,000 to $8,000 and dump for 31%. In the prior bull market of 2021, we saw Bitcoin sell off nearly 31% before climbing to new highs. And as things stand from the top over here, we've seen the market and Bitcoin in particular sell off almost 30% yet again. So this has the potential to be a new local low, considering we broke out to new all-time highs. This would be a retrace. And actually not too long ago, we also saw the market sell off for another 33%. This is arguably one of the hardest Bitcoin bull markets we've ever had to trade. Now, in this same time frame, XRP wasn't moving too strongly, but then into these moves, XRP really did. But XRP has seen a lot of that same volatility in the past. The real question is, when will this be over? Are we still in a bull market? Well, I think it's important to pay attention to the stock market. I'm not saying that we can't get a bit of a retrace or a bounce, but ultimately things are looking pretty weak. That doesn't mean that the bull market is over. It simply means that from the intermediate term perspective, we might be in for a slight amount of more downside as Wall Street continues to fear what's going to happen next with Trump. They feel like he's unpredictable and a loose cannon when it comes to his tariffs, as U.S. economic policymakers have been singularly focused on achieving a so-called soft landing that brings inflation down without a recession. But right now, from the market perspective, things aren't looking as good, as there is a period, and this is directly from Trump as he sidestepped a question on a recession and whether it could lie ahead. He said there's going to be a period of transition because we're doing things very big. Tariffs are going to be the greatest thing we've ever done as a country, and it's going to make our country rich yet again. However, the markets don't really believe that, as even economists at JP Morgan Chase said Monday that the risk of a recession had edged up to 40% from 30%, according to their analysis, owing this to extreme U.S. policies. So much so that many people believe this is the start of a true recession, as even Reuters is reporting $4 trillion has been wiped out just from the S&P 500's peak last month, again, which is the benchmark on Wall Street. And if you don't already know, you do have to pay attention to TradFi markets, especially risk on asset classes like stocks, because they've traded very similarly according to institutional managers and fund managers as XRP, Bitcoin, and the entire crypto market. But what's really interesting is that many people are failing to see all of the positives, considering it's very difficult to be positive when you're currently in a loss or down tremendously on your portfolio. But the positives that would actually come from Trump's economic strategy, as David Friedberg explains it extremely well in this video. Let's take a watch.
I don't sit inside of Trump's head, and I don't have any direct line of communication to folks that are constructing the theory and the policy. If I were to say, what's the most masterful plan in an optimistic way of what could be going on here, I would kind of craft it as follows. Tariffs aren't being done in isolation. They're being done along with a coordinated policy effort to reduce income taxes and another policy effort to reduce government spending. So those are three legs on a stool. Tariffs, reduced income taxes, reduced government spending. They're related to each other because if we increase tariffs, to import products is more expensive. When the industrial supply chain goes to the lowest part of production, it's going to end up offshoring when there's no tariffs. And if there are tariffs, then you start to do production here. So you're increasing both security for the U.S. supply chain, but also increasing demand and creation of a workforce. I think that the income tax piece is critical here because in order to make the capital available to build that industry here, we need to unleash capital, and reducing of income taxes, the economic theory would be that capital will now flow into these entrepreneurial activity, these opportunities that have emerged, where suddenly it makes sense for me to make textiles, to make metals, to make materials, to make cars, to make all this stuff here in the United States that I otherwise wouldn't be making. So both the corporate and the personal income tax, by reducing it, unleashes capital that instead of going into the government, it now goes into the private sector, into building businesses. By reducing government spending, we are moving workers from the government into the private workforce. So as those new industries pop up, as those investments start to get made in building new industry onshore, where are the workers going to come from? That will unleash the workforce, and it will counterbalance the inflation that we're experiencing. So there's a lot of inflation because of tariffs, and by reducing government spending, that's the offset to inflation. So those three actions, I think, are three legs of a stool, and they actually are all interrelated to one another. So that would be my grand master theory of what might be going on.
And so think about some of the things that you said. Obviously, this moment right now is going to be very painful. The uncertainty, the fact that almost all media outlets, including people on crypto Twitter, continue to complain about. But at the end of the day, nobody likes to see a loss on their portfolio. And anything that is worthwhile, right? No pain, no gain. If you want longer term gains, you have to change the things that you've been doing, considering we've seen record levels of inflation and record levels of taxation, while at the same time continuing to increase our government debt. One of those things is going to break. And so ultimately, I believe Trump is trying to break it all and restart anew, to tax people less in the United States, to onshore more jobs. And at the end of the day, it's painful for companies, right? If it didn't cost me as much to manufacture or build things in other countries, I actually spent a lot of money building out the infrastructure in other countries. But if tariffs are high, I'm going to be forced to bring a lot of that manufacturing back onshore because it's cheaper. So yes, it cost me more in the short term, but in the long term, it actually solidifies the US economy in a way where we can't be attacked from without. We don't have other countries, or better yet, we're not reliant on other countries for virtually everything. Manufacturing, industries around energy, and we even tax our citizens less. It hurts, I get it, and it might hurt even more. But just like building muscles, if you don't tear them and you don't go through the pain of a hard workout, you'll never actually see results. And so what exactly is going to happen next? Well, I would say play your cards right and arguably protect against downside risk. I'm not saying you should sell your entire bag. As a matter of fact, I wouldn't give you financial advice anyways. Do what you will with this information. As things stand, we can see that we had our previous all-time high on Bitcoin at around $68,000 to $69,000. So I'm going to go ahead and put a range tool right there, arguably just a box. And as you can see, that became a range resistance into the pumps in March of 2024 before we finally broke out to new all-time highs at $109,000. Again, I'm charting Bitcoin because it's going to give us context for what happens next with XRP. If this was our high, now we're going to have to find our major low of the range. This would be what we call a downtrend, a series of lower highs and lower lows. We experienced our bottom right down here at about $15,000. Since that point in time, we've now been in an uptrend, a series of higher highs and higher lows. And I'm not going to mark every single one of those on the chart. However, it's helpful to know, where are we actually trending? And better yet, is the market actually done trending to the upside? Well, when I zoom out, and the reason I've zoomed out to the daily time frame, and arguably you could even go to that weekly time frame, is because it gives you more context. Okay, context is crucial when trading ranges. This would be the 1, 2, 3, and then essentially this entire range here, about 3 major times in history since 2021, right? That if we come back down into this range, I would argue it looks more like a support. What used to be a resistance now becomes a support. So even if we break down to that $66,000 or $70,000 level, or even potentially lower down to $62,000, this would look like a really good support on Bitcoin. And this would paint, even if we dumped into this range, a higher low into a longer term uptrend. So although we might have markets spooked quite a bit, this may not actually be the local top. As you can see here in the previous all-time high, right, we got a new major low. We got another major low. So this is an intermediate term downtrend in a longer term uptrend. It's very much possible that we get another intermediate term downtrend with a new higher low into a longer term uptrend. You do want to pay attention to that. And so by the way, if you want to learn how to do that more properly, or any of that interests you or excites you, every single Tuesday, I just got off the last one with our course students, I host a Technical Tuesday call where I teach you everything you need to know in order to be a professional when it comes to technical analysis. All you have to do is join Altcoin Pro University by clicking the link down in the description below, bullrunners.com. On the other side, you'll see this 26-minute video that explains everything you get on the other side. We have a team of researchers and analysts that not only share all sorts of expert data and information, but they share with you DeFi yields, airdrop alerts, altcoin picks that have the potential to 5x, 10x, and even sometimes more. We have hundreds of hours of courses, and we are going to consistently be adding to those courses. And of course, you'll have access to me and others inside of the Bull Runners channel over time. So that said, all you have to do is go to bullrunners.com to check it out. And we have such an extensive library that we are consistently adding to, like how to start, when to buy, when to sell, ultimate yield farming guides so you can put your crypto to work for you and earn interest on it, to pair trading, to questions that you might have, the how-tos of everything, the psychology, how to avoid getting rugged or scammed, and how to even get ahead of the curve by taking advantage of narratives and getting into cryptos before they actually break out and pump hard. So if any or all of that sounds interesting to you, head on over to bullrunners.com, and I look forward to seeing you on the other side. And so not only are we in a longer term uptrend, we could potentially see some longer term benefits from the tariffs, even though it hurts, as well as the fact, and think about all of the positive news that we've covered over the last year surrounding economic policy, ETFs, no more lawsuits at the SEC, even the NASDAQ is now planning 24-hour trading. This is one of the largest exchanges in the world, and they plan to do it in the second half of 2026. The only reason they're doing this, introducing 24-hour trading, is likely due to the fact that the crypto market is beginning to dominate and garner a lot of attention. And so if the rest of the market doesn't move with this 24-hour trading deal, then the entire equities market will likely get left behind. And I actually believe the NASDAQ is going to integrate a lot of blockchain technologies into their backend, which will be very bullish long term. But in the short term, things aren't looking too hot, especially when we look at one chart. And that is when we look at the yield curve inversion from the 10-year over the 2-year bond. I'm not going to explain all of this on this call. This is something that we're going to explain inside of Altcoin Pro University more thoroughly. However, for those of you guys who are watching this video on the channel, this is actually quite bearish as things stand, considering we just saw the yield curve invert all the way through July of 2022, and then we saw a normalization of the rates. In other words, this price action crossed over the green line at 1%. In other words, when the 2-year becomes less expensive and we get a normalization of the rates, or I should say you get less interest on the 2-year, that is typically indicative of a recession coming within 6 to 12 months. As you can see here, back in 2020 or 2019, before we actually experienced coronavirus pandemic, and the price action on this chart took off to 13%. Or back here in 2007, before the Great Recession and the crash of 2008. And yet again in 01, just as we were topping off in the market and we saw the dot-com bubble, we saw the normalization of rates, and within months, these markets crashed. If I were to take this and align it perfectly with the actual stock market or the S&P 500 right down below, and this again is the 10 and 2-year rate, you can see that when we got the normalization of rates, the market had already topped off in 2001 and crashed for some major lows into 2003. You saw it yet again, a normalization of the rates, and we were within months of the Pico top in 2007 before the Great Recession, and the market dumped from $1,500 all the way to $670. We saw it yet again for a very short period of time, right? In 2019, the market continued rallying for like 6 to 8 months, and then we saw that major correction and crash in 2020, and the rates popped off. Well, this has been one of the longest, most drawn out inversions we've ever seen, and it has the potential to be one of the most long and drawn out normalizations. But typically what follows after a normalization of the rates as we see continued sell pressure and this rate pops off to the upside, which is why I think it's so important to play cautiously at the current levels we're seeing on XRP. Even though today's close was very bullish right here on a daily time frame, right? The price dumped down to 190 and we pumped right back up to 225. We're currently sitting at about 222. Ultimately, we do have support right here down to 195 and 190. It's still a technical intermediate term downtrend where we have a normalization of rates, where people aren't too sure how deep this market's going to correct. And anything at the 220 range all the way up to 276 could still be bearish as we have a downtrend. And any more touches down here at the $2 level to 195 is going to spell a local disaster for XRP. Now, in the long term, just like I explained with Bitcoin, we could still be trending up, but that doesn't mean we can't make some new lows, considering the fact that we are officially now painting what seems to be a head and shoulders. So one last touch and breakdown here on some volume could take us right down to that $1.50 to $1.40 level before we see any level of support. And nobody wants to take that type of a loss. So personally, I'm not adding to any of my positions here. And because I believe we could potentially be in for some more downside, I'm actually sitting on some cash in order to buy some dips into the longer term uptrend, especially when Bitcoin, or if Bitcoin hits anything between $70,000 down to $62,000. To me, wherever altcoins land, whether it's XRP, whether it's SUI, whether it's TRX, NEAR, Solana, doesn't matter to me. All of them will dump with Bitcoin. And I believe if you've been around for longer than 3 to 6 months, you've already watched that happen. The majority of altcoins dump way harder than Bitcoin. Luckily, XRP has actually been performing relatively strong to Bitcoin. But with Bitcoin's recent breakdown below the range that XRP has been holding, things aren't looking too hot for the rest of the market when you already see all of this sell pressure right here at the $92,000 level. So even although we have dip buyers and a local support right here, it's very much possible and potential that throughout the week we actually dump even lower. Now you take that and combine it with uncertainty in the stock market, with the normalization of the yield curve, and with the fact that day traders in terms of actual futures and leverage are still overly bearish, with more shorts to the tune of about $6.5 billion versus $2.687 billion on the long side, we can reasonably assume that short sellers are still a longer term in control. And by the way, I don't like to bet against the trend. I typically like to bet with it. And so with all of that said, even our very own professional analyst, Yoni, made this post specifically for our community members. This is again stuff you only see by being a member here, talks about how to survive now and win later, and shares a ton of analysis inside of this post, what's happening, what to do, what not to do, and then a bunch of data and charts to prove it. So that said, if this sounds interesting to you and you want to learn more, head on over to bullrunners.com. You can find the link in the description below, and the alpha is truly here. Any one of these posts could potentially change your life and either save you a lot of money or make you a lot of money. And every single day you wait could be a day you miss out on that alpha. So go to bullrunners.com. Thanks so much for watching the video. If you enjoyed it and learned something new, be sure to smash the subscribe button. I look forward to seeing you in the next video, my friend. Goodbye.